Hey guys, Ryan Flanagan, Keller Williams Realty. I've got my friend Aaron Arlington here. He's with Flat Branch Home Loans. And really what we wanted to discuss today was a little bit about mortgage rates, kind of where they've gone since COVID, where we anticipate them going, maybe some things to do with the election year that we're facing right now, and just kind of the state of mortgage and things to be looking out for, things to maybe capitalize on right now. And so just going to ask Aaron a few questions in regard to that. So Aaron, when we're talking about, I guess let's rewind. What happened during COVID for mortgage rates, and how have you seen it? Has it rebounded? Has it stayed pretty steady? What has happened since, say, March in our world?
Well, as far as in the mortgage industry, a lot has happened kind of behind the scenes. How it relates or how it translates to the borrower, it worked out great because mortgage rates are super low.
Sure.
And so I'd like to just real quick go all the way back to, this is my 20th year in the mortgage business. When I first started...
He looks like 25. So.
Yeah. When I first started, we were in a refinance boom. I was refinancing people from 9% down to 7.25%, 7.5%, and they were ecstatic. So where we're at now, we have a very unique opportunity in that I'm sure your parents have told you, like,
sure,
they had to walk to school, uphill both ways in the snow, and yeah, they paid 18% interest on their mortgage. Well, we're going to be bragging to our kids someday that we had a mortgage rate in the 2% range.
That's right, and it was downhill both ways.
Yeah, so it's a great opportunity to take advantage of the lower rates and saving money. So it's a great time.
It's amazing. So rewinding a little bit, so not to get into all the nuances of it, but COVID, I remember when this first hit, we had a lot of conversations like, what's going on? I mean, there were instances where you couldn't even lock a rate because it was just going like this.
Mm-hmm.
It was so volatile.
Right.
At the time.
Well, when it first kind of started to happen, nobody knew what they were doing. Yeah. So everybody was scrambling, and things have kind of settled down, but the reality is there's more risk involved now. The amount of people that have asked for assistance it's had a ripple effect, and so a lot of the mortgage servicers are kind of tightening up, and so that it comes all the way back to us where we've had to raise our credit score requirements slightly on some of our programs, but there's still lots of opportunity. We're still doing lots of loans, closing lots of loans and helping lots of people.
Sure.
So
it's awesome. Just take a step back from a year ago. Where were we compared to where we are now as far as interest rate, just from a year ago? In rough ballpark.
I would say even a year ago, rates were really good. I would say they were probably in like the mid 3s.
Right.
And so we're almost a full point lower.
Almost a full point in just a year's time, in a chaotic year at that.
Mm-hmm.
So
the way the mortgage rates work is anytime there's bad news, when the economy is suffering, when unemployment rates are high, when there's a lot of those unknowns, that's when the mortgage rates get stronger and they get lower. So once I'm anticipating once they announce a vaccine for COVID, once the election is over, things start to settle down and things start to improve, you're going to see mortgage rates start to go back up.
Gotcha. So that's a good note to have. If you're satisfied with where you're living now and maybe you're in that 4% range, I'm going to encourage you to talk to Aaron. His information will be somewhere in this link or whatever, but talk to Aaron and see if he can refinance you into a better position. You brought up something with that last point, the election year. We see this every 4 years.
Mm-hmm.
What is typical of an election year when it comes to mortgage rates?
Well, when there's around election time, again, a lot of unknowns, and just the word volatility really comes to mind. You're going to see the stock market have big swings up and down, and the mortgage rates are directly correlated with the stock market. So when you see big swings with the stock market, you're going to see big swings with the bond market too, which regulates mortgage rates. So you could see some big moves, but I think it's going to be temporary. Again, I think once whoever takes office, once all that kind of the dust settles,
Sure.
You're going to see mortgage rates settle back down.
Sure.
You know, whether they go up or whether they go down, they'll kind of
level out.
Mm-hmm.
Gotcha.
Yeah.
Obviously, we're seeing historic lows now. I mean, it's going to be really hard to go lower.
Right.
Wouldn't you agree with it?
Well, you know, if you would have asked me, I don't know, 3-4 months ago, do you think the 30-year fix will ever get into twos? I would have said no.
Yeah.
Because I'd never seen it before.
Sure.
That's the
20 years.
thing.
Yeah.
That's the thing. When we've never seen a rate that low, it's like, well, why would they get that low? But now that we've seen them, it's like that's the $1 million question. Will they continue to get lower? There are people that I refinanced again because going back a year ago, rates were really good.
Yeah.
And so I was refinancing some people back when the rates were in the low 3s and they thought they were getting a great deal.
Mm-hmm.
But had they known,
Sure.
you know, they would have waited, you know, a few more months and got an even lower rate. So, gosh, it's scary to think that, you know, the rates would get any lower than they are now.
Yeah, that's amazing. Well, guys, we just want you to be apprised of what's going on in the market. Obviously, it's a fantastic time to buy based on rates. Great opportunity to refinance if you find yourself above like a 4% and you're happy with your home, you want to stay there for a little bit. It's definitely a great opportunity to sell as well because we're seeing inventory be pushed down on the selling side, driving prices up, and then obviously from a borrower's perspective, they're able to get into homes at a much lower rate based on the interest rate itself. So if you have any questions over the market right now, feel free to reach out to myself or Aaron, and if we can help in any way, we really appreciate it. So hope you guys are staying blessed, being safe, and we'll catch up soon. Thanks.
Thank you.